Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at XRP over here. And what we see is a 5-wave move to the upside starting in 2023. And we have a 5-wave move up in a broadening wedge or an ascending broadening wedge. Or in other words, you can also call it a leading diagonal in an Elliott wave point of view. And usually with the 5th wave, you usually see an extension to the 1.236 or at least 100% fib. So we perfectly went to the 1.236 here at 92 cent, and then we went on to start our correction. So we had a 3-wave move to the downside, a 3-wave move to the upside, and a 5-wave move down within our C wave. So now we've hit the 1.618 there, and we've also hit the 78.6% fib from our wave 1 low. So we went into extremely oversold territory once we reached this 5th wave of our C wave. So from the untrained eye, it may have seemed like the correction was done over here. But it looks like this wave 2 is a little bit more complex than we think, a little bit more complex than we expected. And all that means is that it means that there's more accumulation within the structure. More accumulation means more explosive price action for wave 3. We're gonna likely have a quick macro wave 4, and then we're gonna have a wave 5 to finish it all up. So once we had that ABC down, it looks like that was just our W wave, and then we went on to start our X wave. So for our X wave, we had a 3-wave move up, a 3-wave move down, and then a 5-wave move to the upside, very similar to that of our W wave. Okay, we also had an extended 5th wave, and then we had another, and then we went on to formulate our Y wave. So within our Y wave, we have our A wave. So we have a 3-wave move down, a 3-wave move up within your B wave, and then for our C wave, we have a 5-wave move down. So you have your wave 1 over here, your wave 2, your 3rd wave, come up for an ABC correction. Okay, this is your ABC correction. And then we're now doing our 5th wave of our C wave of our Y wave. Okay, so usually when you have a C wave in a flat pattern or a WXY correction, you're often going to see the price start to form a broadening wedge, or you often see the price start to channel, okay? Or even you may see a falling wedge, okay? And basically what this is called, it's just called an ending diagonal, because the waves tend to overlap each other when the price is squeezed within the last leg to the downside before having a resolution, or in other words, a jump across the creek. Okay, so this over here is your peak, right? That's your peak. You come down, right? Hit extremely oversold territory, and then you have a run up. And you may not breach this high, or you may go just above it. So we don't breach the high, and then we come down. Okay. Come down. And this over here would be your A wave. This is your B wave. And then within this C wave over here, you're going to see the price start to form a broadening wedge or a falling wedge. And what we're going to call this, we're going to call this our creek. After your creek phase is done, and by the way, the reason they call it the creek is because with every low, they think it's the bottom. Retail thinks it's the bottom because it chops so many investors out, makes people think that every low is the bottom. And then while frustrated holders sell their bag, while long-term holders, FOMO in, you have price have a sudden surge to the upside, okay? And what this is called our jump across. So whenever you have a creek, okay, whenever you have a creek, you're usually going to see a jump across once that creek finishes up. So same thing applies to XRP. Within our C wave, we have a descending broadening wedge, okay? We're now within our fifth wave of our C wave of our Y wave. So when we zoom in here on the 2-hour time frame, we see a first wave to the downside. So this is our wave 1. We see an ABC up for our wave 2, another 5-wave move down for our third wave, a triangle wave for our fourth wave, and we're starting our next and last leg to the downside, which is our fifth wave. So over here would be, so if we're going to plot out the subwaves here, this over here would be your wave 1. This is your wave 2. Come down for a third, fourth, and then a truncated wave 5. And then we have a ABC correction. So this is your one. Wait, it would actually... It would actually look like this. So this over here would be your subwave 1. This is your subwave 2. This is your subwave 3. You have an A, B, C correction for your wave 4. And now we're starting our subwave 5 of 5. Okay. This would make more sense. Okay. And all this was your A wave, B wave, and then this is your C wave of your subwave 4. Okay, so it looks like we are making our way down here. Our subwave 4 of our wave 5 came up to the mitigation block, or the 70.2% fib. And now we're seeing a continuation downside. I think we're only due for one last leg. So I think we're going to take out these buy stops here at 49 cents. I think there's a lot of inefficiency down there. And then we're going to reach around the 47 to 45 cent region. After hitting that region, so let's see what it looks like. So if we go on the 1 hour here, let's put on some moving averages on our charts. And I really like the 50 and 21 period on the 4-hour time frame. I feel like it really shows you where the trend is going, and it shows you if bulls are in control. And you can see here for our fourth wave, we wicked right up to the 50 period moving average, right to the mitigation block, and towards the 702. The 702 from our subwave 2, right? Our subwave 2 down to the bottom of our subwave 3. Okay, so this is good over here. And you can see that the 10 period on the 65-minute time frame, we're finding continuous resistance off of it. This is that purple line right over here. Okay, that is the 10 period on the 65-minute time frame. So looks like we're gonna have this move down over here. So right now, a lot of sellers are stepping in. Once we go below this low here at 49 cent, there's going to be a lot of retail panicking. There's going to be a lot of retail selling their bags. What happens when people sell their bags aggressively in a in a panic state, right? We have what's called a short squeeze. Once you go below these lows over here at 49 cent and 48.61, we're going to be finishing up our fifth wave around 47 to 45 cent. Okay, that's going to cause a major short squeeze, and Brad Garlinghouse and his friends will be very happy. So let's take a look here, and we should be coming to an end here. So this is your A wave, B wave, sorry, your W wave, X wave, and then your Y wave. And then within your Y wave, you have channeling. Okay, so that's very significant that we see that. Now, I wanted to show you this chart over here, this historical chart. Okay, and we'll take a look at it on the daily time frame. We'll take out our indicator here. So I really like this indicator. It's called Traders Dynamic Index. This guy right here. And every single time we form a top or a bottom on XRP, this indicator never disappoints, because over here we have bullish divergence. Okay, that's your bullish divergence to mark the bottom. This is your bullish divergence to mark the bottom again here. So hold on, let me go on the I think it was the 2-day time frame. So let's take a look here. Yeah, so you see how it's called every single bottom and top by forming divergence? And you can see here that we are forming a bullish falling wedge on the indicator. And we're very close to that green zone. So I'm thinking the indicator moves into that green zone over there and then forms a divergence with the August low. So over here is the August low right here. Okay, so let me see here. So this low over here, this is the August low. I think if we come down to 47, 45 cent for this last leg over here, we're still making a higher low. And then if we take out the indicator here, we'll probably form a divergence on the daily time frame. Okay, it'll probably look like this. Or we probably have an equal low, right? And then this comes down like this. And then we'll probably form a divergence on the small time frame when we zoom in. And then that will be our bottom signal. So this is a class C bullish divergence when you have a higher low, but an equal low on the indicator. So that's called class C bullish divergence. So I think that's going to happen. And yeah, so when we look here on the 1 hour time frame, looks like we're rejecting off the 10 period after finding resistance at the 50 and 21 period moving averages. Okay, we're gonna come down to these buy stops over here at 49 cent, 48 cent, and it's gonna cause a short squeeze. A lot of people are going to be panicking once price goes down there, and it's going to complete our wave 5 of our C wave. Now, when we take a look at the historical chart over here, we see that once this correction comes to an end, it's go time for XRP, because when we zoom out over here, and let me just delete everything here. I want to show you going to show you my thoughts here on XRP. So after this WXY correction is finished, we're going to come up for our third wave, and we're likely going to have a very quick wave 4 because our wave 2 was long and drawn out. It lasted over 192 days. So it wouldn't surprise me that we have a very quick and shallow wave 4. I feel like once we break out of this range, it won't give people much time. It won't give bears the opportunity to make meaningful profits. And then we have a wave 5 to the upside. And of course, once these targets come to fruition, once this wave 3 and wave 4 comes to fruition, we'll get more accurate wave 5 targets. So I hope you guys enjoyed the XRP video. Looks like there's only a little bit more down to go before this finishes up here. I hope you guys enjoyed the video. If you have any questions, just let me know. Peace out and take it easy. See you in the next one.